In the world of politics, some of the most important battles are fought not with loud speeches, but with carefully chosen words in quiet hearing rooms. These exchanges can reveal the hidden fault lines in our government and expose the immense power wielded by unelected officials. We are often told that institutions like the Federal Reserve are simply concerned with numbers and charts. But what if their power could be used to fundamentally reshape society, deciding which industries live and which ones die? This is the central question at the heart of a tense confirmation hearing, where a senator's pointed questions uncover a battle over the very soul of financial regulation. Let's look at the key exchange that reveals everything.
Thank you both.
Thank you, Senator Tester. Senator Kennedy from Louisiana is recognized.
Thank you, Mr. Chairman. Governor, Director, congratulations on your nomination. Governor, I realize at the Federal Reserve that you have a big staff that advises you on inflation. And based on their track record, my guess is they also advised people to buy condos in Las Vegas in 2007. But you don't have to accept their advice. So, with respect to your predictions on inflation, how did you get it so wrong?
Well, Senator, thank you.
Could you move closer to the mic for me?
Yes, of course. Thank you for your question, Senator.
You're welcome.
So I think, nobody got the pandemic right. The pandemic is unprecedented.
Yeah, but I'm asking you about inflation.
Yeah, so I think as forecasters, private forecasters, certainly the forecasters, the SEP, the whole committee, we thought that perhaps we would see a more rapid resolution of the pandemic and the supply-demand mismatches, in particular in cars.
Excuse me for interrupting,
energy.
but I don't have much time. Do you think are you saying that inflation was caused by the pandemic?
So we certainly have seen the perpetuation, for instance, of the Delta variant leading to
Yes, ma'am. But are you saying that the inflation is caused by the pandemic?
I certainly think the supply-demand imbalances that have been the biggest contributors to the very high inflation we've seen are directly attributable to supply chain issues, distortions in demand.
Well, but here's what troubles me about that. I'll agree that inflation is spreading, but I don't see people going around coughing inflation on each other. I think, and I understand supply chains matter, but so does the demand side, and so does too much money chasing too few goods. And I don't think, and I don't think any fair-minded person thinks that inflation is solely the result of the pandemic. Let me move on. Do you think that federal regulatory authorities should use their considerable power, not just the Federal Reserve, but federal regulatory authorities? Do you think they should use their considerable power to discourage private banks from lending money to oil and gas companies?
No.
Ma'am?
No.
Okay. Do you think that those federal regulatory authorities should use their power to discourage private banks from lending money to gun manufacturers and dealers?
It's not our job. We don't tell banks what sectors to lend to. We just ask them to risk manage, and we make sure they have good processes in place.
I agree with you, and I thank you for that. Will you issue a statement to that effect if you're confirmed?
Well, I certainly have made that statement. We'll continue to make
Yes,
that
ma'am.
statement.
Would you issue a separate statement saying, I want to make it clear for what it's worth to all of my colleagues in government, I don't think that you should use your power to discourage private banks from lending money to oil and gas companies and to gun manufacturers.
Well,
will you do that?
Well, I won't tell other regulators what to do, but I will be happy to talk about what we do at the Federal Reserve, what our statutory authorities require us to do.
Okay. I'm going to follow up with you on that. Okay?
Senator?
I take that as a yes, and I'm looking forward to that statement. Director, gosh, this is America's debt. I'm not going to have time to ask you about it because I want to ask Director Thompson a quick question. Yes, Director Thompson. Madam Director, are you familiar with President Biden's risk rating 2.0 pricing scheme for the National Flood Insurance Program?
Sir, I'm not familiar with the details of that program.
Well, I need you to take a look at it. You talk about affordability. President Biden is about to make housing for at least 5 million Americans unaffordable by raising their flood insurance from $1,000 a year to $5,000 and $6,000 a year, and you're going to have a problem. Real quickly, Madam Governor, do you think we've got 4 big banks? They have market share between 30% and 50% in the greatest economy in all of human history. They're not really banks, they're countries. Do you think economic power is too concentrated in those 4 banks?
Well, I certainly think that from a financial stability point of view, when you have very, very large institutions that are systemic, you need to have very, very big capital buffers and liquidity buffers and risk management, because it would be very, very difficult to resolve those banks in a moment of financial stress.
Okay. Thank you, Mr. Chairman. You've been
Thank you,
very,
Senator
very
Kennedy.
kind with your time. My office will work with you on that statement about oil and gas and gun manufacturers.
Thank you, Senator.
This wasn't just a random series of questions. It was a masterclass in political strategy. The senator began by attacking the nominee's credibility on inflation, suggesting her team's predictions were wildly off the mark. This was a deliberate tactic to establish a foundation of doubt before moving to his primary target. The core of his strategy was revealed with 2 seemingly simple questions. Should federal regulators use their power to discourage private banks from lending to oil and gas companies and to gun manufacturers? He wasn't just asking for an opinion. He was forcing the nominee into a public and politically charged box. The nominee's answer, that the Fed's job is not to tell banks which sectors to lend to, but to ensure they manage their risks, was the precise, textbook answer of a careful regulator. But watch her careful navigation. When pressed to issue a statement telling other government agencies what to do, she commits only to speaking about the Federal Reserve's authority, skillfully avoiding the trap of overstepping her role and dictating policy to other parts of the government. This is significant because it touches upon a fierce debate in Washington about whether financial bodies should be used to advance social or climate policies that haven't been passed into law by Congress. The 2 main themes the senator successfully highlighted were, first, the question of institutional credibility, and second, the immense and potentially misused power of financial regulation to shape the American economy based on political agendas. This exchange is a window into a much larger global debate surrounding what is known as ESG, which stands for Environmental, Social, and Governance Criteria. Proponents argue that for financial stability, banks must consider long-term risks, like the impact of climate change on coastal properties or the legal liabilities of certain industries. In this view, discouraging loans to a fossil fuel company isn't political. It's just smart risk management. However, opponents argue this is a dangerous backdoor for political activism. They contend that regulators, who are not elected, could use the vague idea of risk to starve politically unpopular but legal industries like oil and gas or firearms manufacturing of the capital they need to operate. Think of it like a bank denying a small business loan, not because the business isn't profitable, but because the bank's regulators have signaled they disapprove of that particular industry. This hearing put that exact tension on full display, moving it from an abstract concept to a direct question of policy with real-world consequences for everyday Americans' energy costs and constitutional rights. So, what are the key takeaways from all of this? First, congressional hearings are often a form of political theater designed to force nominees to state their positions on controversial issues on the public record. Second, the nominee clearly affirmed the traditional role of a financial regulator is to be a neutral umpire focused on risk, not to be a player on the field picking economic winners and losers based on a political agenda. And third, The fundamental conflict over whether to use the banking system to enforce social and environmental policy is one of the most significant and unresolved questions facing modern governance. This brings us to the ultimate question: where should the line be drawn? Should powerful financial institutions stick strictly to managing financial risk? Or do they have a broader responsibility to help solve society's biggest challenges, even if it means picking sides? What do you think? Let us know in the comments below. And if you found this analysis helpful, be sure to like, subscribe, and share this video.